So I'm going to tell you about Erdene Resource Development today. A little background, I went to the country 21 years ago, Mongolia, as one of the first foreign investors in the country, and witnessed an opportunity to still find those big open pit high-grade deposits at surface. It's one of those few places left on the globe that you can go out into the landscape and pick up 1,000-gram samples at surface, which is what we did 2 years ago when we discovered Bayan Hyundai. So this is an emerging gold district. We've invested several $1 million into pure regional exploration in the southwest part of the country to discover what we consider the Hyundai district. It's now generated 2 high-grade at-surface deposits, as well as 22 high-quality prospects. Over the past year, we've established a resource, we've issued our initial PEA, and we now have a high-grade, high-return, low-capex deposit that will form the core of the development as we move forward in this exciting new district. And I think one of the critical things for the mining industry today, and something we're very cognizant of, is social license to operate. I just read up on the plane this morning that there was a survey of mining executives regarding what was the most critical issue facing them in the year ahead of them, and 54% stated social license to operate. So permission from communities, permission from governments to act to develop projects. In the past year, we became the first dual-listed company listed on the Mongolian Stock Exchange. We have 6,000 Mongolian shareholders, and we've been working in the district that we're operating in Mongolia for over a decade. This location is about 200 kilometers north of the Chinese border. We're about 180 kilometers northwest of the Seke border crossing, which up until about a decade ago was a desert location along the border of Mongolia and China. Today, there's multiple railroads, blacktop highways, 3 major coal mines that have all been built up over this period. And I think this is just the tip of the iceberg of what we'll see in this region of southern Mongolia as we see the demands come out of China moving forward. So our projects are clustered in about a 40-kilometer by 40-kilometer area you see just to the northwest of the Seke border crossing. In September of last year, we issued our Maiden Resource, and if you cast your eye across the 0.6, 0.7 cutoff, you'll see just over 1 million ounces of over 2-gram gold. This is within 150 meters of surface, effectively exposed at surface. But if you look at the final row on that page and you look at the 1.4 cutoff, and keep in mind this is an open pit opportunity, we have 642,000 ounces of 3.7 grams per ton. So extremely high grades for an open pit opportunity. We've carried that into our PEA, and what you see here is head grade that we'll have in our initial development of 3.4 grams per ton, well over 3 times the global average open pit grade. A lot of detail on this page, but let me hit some of the highlights. We came out in December with our initial preliminary economic assessment. We looked at that resource that I just demonstrated or showed to you, and we looked at a simple open pit starting with the Bayan Hyundai deposit and expanding into our Altan project. We used what I believe is a conservative gold price relative to our peers, $1,200 gold. We have that head grade of 3.4 grams per ton. Over an 8-year mine life, we're generating 400,000 ounces of gold, averaging about 50,000 ounces per year, and peaking in year 3 at 68,000 ounces. There's a 10.5 to 1 strip ratio, 82% recovery, a low all-in sustaining cost of $714 an ounce, and a very low capital cost of $32 million US. Payback in 2 years, a very high internal rate of return of 56%. Looking at the cash flow from this operation, as I mentioned, we'd see payback in 2 years on that $32 million capex. After a year of construction, we're generating on average $20 million a year in free cash flow. Today, we have a market capitalization of approximately 30 million US. You can see where we sit in the all-in sustaining costs relative to our peers in the lower quartile. And in terms of that return on investment, we would rank at the highest in regards to our peers with a 56% return, looking at the top TSX-listed companies in the pre-development stage today. Sensitivity to gold price, as I mentioned, we used a $1,200 gold price as our base for that 56% return. And you can see how sensitive this is to that increase in gold price, where if we look at a $1,500 gold price, we're looking at an 89% return. And on the right-hand side, you'll see an MPV today of $99 million US. At a $1,500 gold price, that moves up to $175 million. So very sensitive, and this is driven by that high grade. So what are some of the upsides that we see as we move forward on this project? This is a very high-grade deposit. But for those of you in the industry that have been through resource estimates on these ultra-high-grade deposits, they tend to be dumbed down, if you will, on a conservative approach in the modeling. In this deposit, the highest block grade is 55 grams per ton. We have a multitude of intersections that are running from 50 grams up to 2,000 grams per ton with continuity. So that's something that provides significant upside as we get in and open up this deposit. Additional resources in the vicinity of the current pit that's in the PEA, we have 130,000 ounces of 4-gram material surrounding that. The exploration potential is enormous in this region. We're the only company that has done modern exploration. We found these from satellite imagery 4 years ago, and exploration is just getting started. The land acquisition system in Mongolia just recently opened up, so we'll be active on the acquisition side. We also are working on the recovery side. We're doing some met work as we speak with Blue Coast in BC. Looking at our company today, I really see this as a two-pronged approach. Half is moving through that de-risking, moving from PEA into pre-feasibility, going through the mining license work, and moving this towards a production startup in 2021. But the other half of this is that exploration upside. We're in the central orogenic belt of Central Asia, which is the second most prolific gold belt in the world after the Vit Basin. It has a whole host of deposits that are in that 20 million to 50 million ounce range, and we believe there's a significant opportunity for further discoveries in this belt, and that's where our focus will be. There's that belt as it cuts through southern Mongolia. This part of the region never witnessed exploration because of the closure it was under during the Soviet time, and really its geographic isolation. So as I mentioned, we're the first out there doing exploration. And although we've been very successful, it's on a limited exploration budget that we've carried out over the last decade. The belt that we've identified, we call the Hundi District. It's anchored by Altan Nar in the north and Bayan Hundi in the south. Those two deposits are about 19 kilometers apart by road, and both will be developed under the initial mine plan. Bayan Hundi first, followed by Altan Nar. But I point out also that the exploration in this area has only penetrated to about 150 meters on average. So there's very little deep drilling, very little regional exploration outside of our discoveries. An example of this is the Altan Nar project, 5.5 kilometer long system of mineralization. The red and blue areas you see here, or the colored areas on your screen, are the only areas we've included in the resource to date, down to 150 meters depth. So significant upside here. Intersections of 20 grams of 6, 20 meters of 11.8 grams, open at depth. Moving down to the Bayan Hundi deposit, you'll see in the south the deposit area. And there's 3 areas within 3 kilometers that we're picking up samples at surface running from 20 to 50 grams per ton. We put some shallow holes in there. We've hit up to 70 grams per ton over 2 meters. This is wide open, again, never been drilled before. The pit itself, you'll see that green shell is the pit shell for the PEA. Within that, 306,000 ounces that go into the initial plant. But you'll notice some of those text boxes along the bottom give you an indication of some of the intersections we've had outside of this pit. 35 meters of 4 grams, 2 meters of 60, 10 meters of 12. Significant upside in this area as we move forward. Today we have a share price of 23 cents. We have a market capitalization of approximately 30 million US. We just completed a financing oversubscribed on Friday, so we have $3.5 million in the bank, which carries us through the pre-feasibility and exploration work we have planned. We have a strong shareholder base. So just to sum up, we have a PEA, a fairly recent PEA that indicates very robust economics, bottom quartile cash costs, low capex, rapid payback. We have a high-grade open pit, perhaps one of the highest grade open pits being developed today at 3.4 grams per ton. In the last several months, we've added a number of mine builders to our mine studies team. Cameron McRae has joined the board as the mining studies head. He was the CEO of Oyu Tolgoi. Julian Lawrence has joined us, who's built a number of mines in the region. They're heading up this work and moving us towards development. We have a very strong commitment to Mongolia. As I mentioned, a very strong social license to operate. Exceptional upside in this district. I don't think there's anywhere else I've worked in the 30 years where I've seen no previous exploration, modern exploration. And you have a region as well that has a growing infrastructure opportunity. So as we move forward to development, we'll continue to see this infrastructure growth come out of China. Thank you very much.